We got all of the boxes ticked, and now we have one of the only shovel-ready, permitted, ready-to-go projects in the US.
2027 potential production.
This is Jay Martin.
Luke, it's great to have you back in the studio.
Thanks for having me.
Yeah, my pleasure. So it's a good time to be talking to you because you recently completed the feasibility study. US gold's at like this very exciting moment. You know, there's thousands of gold development stories in the world. Very few actually make it to a place of, proving their economics to the market, and fewer still get all their permits in hand. Fewer still have none of those permits challenged by federal environmental assessments, things like that. But you've jumped through all of those hoops now with your CK Gold project. So before we get into that, for somebody who's brand new to the US gold story, could you reintroduce it? And then I'm going to pull in a bunch of threads from there.
Yeah, of course. So US Gold Corp, of course, I'm the chairman of the company and a co-founder of the company. We went about in 2020 in a bit of a challenged market environment in doing exactly what you just laid out, taking on the boring phase of a project, which is, let's see if it's economically viable now and also see if we can permit that project. So for 5 years through a challenging market, with a Nasdaq listed company, as we got all of the boxes ticked, and now we have one of the only shovel ready, permitted, ready to go projects in the US.
And you're in Wyoming. Yeah. And if this gets built, it'll be Wyoming's first permitted mine. Is this correct?
It'll be the first one in 100 years. So
okay.
hard rock mining turned secondary to a lot of coal, trona, uranium more recently, of course, that we're aware of. Actually, not so recently. I mean, the 50s and 60s, that began. Then oil and gas as well, that's prevalent there. There's 580,000 people in the large state of Wyoming, and I mean it is large for that kind of populace. So their bread and butter is resource exploration and exploitation, harvesting being the largest of the providers. So that manages the state to be able to, for example, no income taxes.
Now, the feasibility study is complete and just put out recently, like a couple of weeks ago. Walk me through the highlights, Luke.
Yeah, pleasantly surprised by, the take of it because, okay, when you do a full-scale feasibility study, you take your baby and you hand it off to a stranger and they do an evaluation of it.
Sure.
You have some inputs. Well, this is how we would like to raise our baby, but they're going to tell you otherwise. It's almost like dealing with the, complete independent, and they come back with reasons and purposes for doing things slightly differently than how you wanted to manage things, the upbringing of the project. So there were no major surprises there. There were some aspects where we think, we still think we can do quite a bit better than that, but ultimately a robust economic project that's going to deliver, in our established reserve, 11 years of mine life, but in the blue sky kind of report, upwards of 16 to 18 years, $640 million, 5% discounted net asset value to the project, a very good IRR, just a robust project. So now you got permits and you got economics.
And 1.6 million ounces of proven and probable right now. But I guess as you kind of hinted at there, once you're in the ground, you mine the resource, not the reserve, right? So there's probably a lot more highway in front of you, maybe 16 to 18 years. And the IRR, the return is like 2.5 years. Is this correct? Do I have that number?
Yeah, the years to payback is just under 2.5 years, but that was using 3250 gold and a slightly different sequencing to what we probably anticipate ultimately the mine will run at, how we'll manage ore at the onset of the production of the mine. But again, that's down to finalizing the final flow sheets and all the different things. But ultimately, the economics were looking really good. Very quick payback. And again, 3250 gold.
At 3250 gold, right. Yeah. And I think the all-in sustaining cost on the FS was like 1,700 and change. At today's metal prices, it looked like around a 61% margin on that project, but you could survive a significant drop in the gold price and still come out on top. $2,700 gold still puts you at a 35% margin with this project. So the economics are strong. You mentioned a couple things when you reflect on the FS, and that's a really interesting perspective that you hand this off, you really get no say. Third party gives you their assessment, you get it back, and that's what you have as your bankable study. What did you see though that you're like, I think once rubber hits the road, we can outperform on this metric or that metric?
Multiple
Okay.
metrics,
Yeah.
from, early stage management of ore and grade and how we'd probably approach it, I think can be better streamlined. And again, that'll happen in the final engineering that'll be ongoing through development. There was a myriad of places where we feel could just be better streamlined, but that's an ongoing and very normalized kind of.
It's the nature of an FS is to be conservative.
Yes, exactly.
Right.
Yeah. So far from disappointed with anything that the independents did, but certainly we see some correlation over to some ultimate optimization. And then there's other optimization around the project that we did not even try to address in the feasibility. I don't want to spiel on, but there's a lot of contained ounces of gold still in the tailings post, processing for the concentrate. And then again, resource upside. So those are things that we're going to kind of bring forward. And that's why when we put out a press release with the definitive, a week and a half ago, the next day we talked about those other, opportunities around the project.
Okay. And the build I think the CapEx is around 422 million. Is that correct?
Yeah. That includes, sustaining or front end sustaining cap as well. So yes.
Okay. Now walk me through the timeline, Luke, for investors who are looking at this story. Like, what's the next material announcement? Is it a construction decision? Like, where are you at?
So we're immediately embarking into the production decision's been made for us, short of obviously capital.
Yeah.
So the real next phase for us is project financing. A definitive feasibility study again also assumes that it's 100% equity.
Right.
So the tables have shifted a heck of a lot in mine financing, even the last 3 or 4 years. So we're looking for competitive bids on project level financing that we've seen, some indications as high as 80% debt, 20% equity, and equity components even being done at premiums to market. Mm-hmm. That's what happens when you're in a secular bull market, when you've got an asset that is, again, fully permitted, ready to go. There's not many of us out there. So there's a lot of capital chasing limited opportunities. Focusing in on capital raise, project financing, that, of course, in itself triggers a lot of probably M&A interest, other people thinking that that's production that maybe they would like to add to their portfolio. So we're just keeping our doors open for all discussion on business, but focusing on the financing, project level financing, and while we're doing so, now bringing in those further optimizations, everything from aggregate potentials and all the things that we left out of the definitive by design that are value adds to the project.
And if I were to ask you, and I don't know how much you can share on this, but if you had a preference or, an indication of which way you might go here, because I think the M&A environment's probably quite ripe, right? Specifically for CK, given that the economics are very good, 11-year mine life there, probably more. Looks like the peak years are sort of years 2 to year 8. Is that correct?
Yes.
And what's the production look like during those peak years, Luke?
Well, so it gets even more confusing around a project like this, but when you use gold equivalents and a relatively low copper number, your ounces of gold equivalents actually come down through the spread between copper and gold price right now. But,
interesting. Okay.
So I'll just use a globalized number. We'll be in the region of about 100,000 ounces of yearly production.
Okay.
In that realm, which is absolutely a world-class asset.
Yeah.
And I've kind of gotten the root of your question there, but ultimately the production will be in the realm of 100,000 ounces.
And what do people need to know about the production in terms of, copper, gold, bit of silver?
Yes, sorry. We are producing a concentrate. The deposit is exposed at surface. We go in, we open pit the ore, and we crush it and grind it down to about 60 micron, and we run it through a flotation circuit and separate the metals that we want to carry on and sand off in a concentrate. And that is basically a very fine sand. And that contains somewhere in the realm of 20% copper, around 2 to 3 ounces of gold, and around 5 or 6 ounces of silver.
Okay.
Per ton. Yeah. In the sand. And it has it's a very clean concentrate, clear of fluorine and arsenic and antimony and all the different things that people are trying to keep out. Highly regarded by the off-takers, and there's a huge market for concentrates right now. So we just sell the concentrate at the project gates, essentially. It's not quite like having the ability to sell a doré, but you're getting spot prices on most of those metals. So.
Okay. So we can talk about M&A, and I think that's definitely a worthy conversation, just given, and I say this a lot, but we talk about this on the channel a lot, that every mining company right now is looking for projects like yours. I mean, every mining company in general, we say, is a melting ice cube, right? It's worth less today than it was the day before because it's extracting that value, selling it, it's got to replace it, right?
Depleting reserves.
Yes. And they can, as you mentioned, expand the resource, extend the mine life. That's option one. Option two, nurture something in the development pipeline or seed fund some exploration, right?
And put their personnel to good use, because a lot of people have established mine builders, and then you need to keep that team, or you're trying to build an established, because we're about to build a mine building team. Someone's got one that's established, that's looking for the next project. Whole slew of kind of, different reasons why people would be looking for a project like this. And again, I always reiterate, right from the get-go, our plan was to build this project, But as I start to recognize that there's more and more attention towards looking for opportunities like this, at the end of the day, I'm an equity investor in this company. And I am the steward as chairman of the company of our investors, our shareholders. So whatever makes the best sense at the end of the day. I think building this, it's going to do nothing but create a really impressive cash flow and have a major impact on the equity of the company on an upside. If there's a smart reason to want to partner up with someone who's already developing, producing, and it creates slightly more leverage or early stage leverage, then we'll consider it. Whatever the best outcome is, relative to the moment in time, that's what we're going to pursue. So right now, it's build the project.
Yeah. I mean, that's what your shareholders will want, right? You to provide, because that's the leverage, right? You can show the market that we can get this done. We can build it. We can raise the money, and conservatively looking at a 2.5-year payback period. So that plan makes sense. You got to build the mine building team, the mine operating team. That would be new stuff to bolt on, but showing the market that's the path increases your position in the event of some kind of offer that comes in, right? Which does make a lot of sense. And I guess it's kind of a silly question, but if you're looking for the next near-term producing asset, is there anything more de-risked than CK right now?
Not that I'm aware of.
Right.
And especially in a tier one jurisdiction. And people like to bandy that statement around, tier one. The US is tier one.
Yeah.
Well, is it? If this asset was sitting in a certain county and even in Nevada, it wouldn't be a tier one jurisdiction. It'd be...
Can you expand on that? Because you're right. And as I understand it, like where you are in Wyoming, there's no federal nexus, right? Like you don't have any federal consideration, I believe, like we saw with Resolution Copper, Pebble Mine. Like we've seen this before, where you can end up trapped in permitting longer than the entire duration of the projected mine life, right? That's happened. So what's the difference in Wyoming?
Well, for one, we're on state ground. Highly unimpactful environmentally, the project. In fact, it's a project that is environmentally beneficial, which I don't want to go down that rabbit hole, but it's huge benefits to the local economy and environment.
Sure.
But we, on state ground, state of Wyoming, their mining law, every single permit we went through, from air quality, wastewater management, the permit to mine, every established permit within that. We also did an industrial sightings permit. That's all laid bare as we go step by step. In the local press, people are allowed to file objection, formally file objection. There is information within the advertisements we put in the paper on how they would follow the process, the steps to file objection. We received no formal objections anywhere throughout that process. It's just a low impact mine, in fact, an impact beneficial mine ultimately post development production. Again, we'll save that for another discussion. Under their law, someone cannot now come in and say, hey, surprise, an NGO, surprise, now we want to challenge that. On federal ground in Canada and the US, you get the right established company, they can, group, they can come in and contest a permit to mine while the project's already being built.
You're exempt from that.
Yeah. So in our situation, they have to basically sue the state of Wyoming now for issuing us a permit to mine. And again, the impact is so minimal that there's no surprises showing up.
And the economic benefit, I think I saw maybe in the FS, the estimate's around 200 jobs for this project.
Yes.
Yes.
Yeah.
Okay. So Wyoming probably loves you for that.
Yeah. Well, again, I will touch on it. I said I'm not going to go deep dive, but post-production, there's a very, very high probability our open pit is going to be paired into the neighboring state park as a water reservoir, which they're in desperate need for.
That's what you're referring to. Okay.
Yeah.
So during your 2 to 8 peak years, roughly 100,000 ounces of gold equivalent, right? What that translates into for U.S. gold, as I understand, is around $160 million of free cash flow, right?
Yeah.
And that points to your payback period, correct?
Mm-hmm.
With all permits in hand, you've got nothing else to worry about, right? Well, I'm sure you have lots to worry about, but your core focus, yourself and George, right? Your CEO, can be on raising that capital, that 422, right? And executing on it, right? Mm-hmm. You touched on this a little bit, the options to put that financing package together. It won't be all equity. I probably safe to make that estimation. You can look at debt, you can look at JVs, you can look at offtake agreements. Like, walk me through how you're strategizing at this point, Luke.
Yeah, certainly. Full focus is on raising the whole $400+ million. Again, looking at the highest debt to equity ratio we can achieve. Yep. Obviously, within reason, you want that debt to be high single digits. You'd like to see the equity component be somehow associated with that debt component. Try and negotiate some kind of premium to that equity. That is the kind of opportunities that are out there right now. But as we go through those processes, it is multiple processes, they need to look through all the history of permitting, everything that's established, is incoming interest from outside parties, whether they be private equity or currently producing public companies. We've got to kind of look at them on a case-by-case basis. So that's our full-time job as we optimize around the project. Also looking, okay, how do we maximize the equity value in the company? Because I can absolutely tell you right now, the equity value in the company right now is not representative of the asset that we've managed to culminate to this point.
And it's your job to tell people that,
yes.
right? And
help them work out that very simple math.
Yes.
And it's only been just under 2 weeks since the markets had the opportunity to see we've procured, what we've pulled together, and now digest it. And we're still dealing with a bit of a liquidity crunch in the cycle right now with things happening in the Middle East, etc. So
interesting 2 weeks to let the market process that news.
Yeah, but eventually it does not matter. The fundamentals are there. The reserve doesn't go away. The project is where it's at in terms of its advanced stage of pre-development. That value is going to be recognized.
Yeah, it's funny how geopolitical considerations have shifted. And I don't just mean in the last month, but in the last 5 years, and projects in or adjacent to the United States are looked at very differently from at least my audience. And I understand why. So question for you then, we're seeing the sentiment in our market shifts, Luke. Like, the mining sector for the last 15, 20 years has arguably been one of the most hated industries in the world, right? Yeah. Politicians, if you wanted to get elected, you had to have a strategy to decouple from the extraction industries. Yeah. Media, the same. Anything that conflicted with the mainstream climate narrative was vilified, and that meant extraction industries were. As a result, the Western world's woken up and realized they don't own anything, and that's a problem. And that's created this massive sentiment shift favoring our sector, complete with not just investor interest in retail and institution, but also governments looking at how they can help our industry move forward faster. That must bring more capital groups to the table. And so when you're out there telling this story, either getting institutions in, showing them the disparity between the company value and the current market cap, are you seeing a lot of new faces on the other end of that table? And people that may want to finance, debt finance, whatever, look at what you're doing. It's a very simple story to understand, right? Because there's very low variability at this point. Yeah. That de-risking process is complete.
Yeah, so it's not so much new faces, it's faces that can finally start to look at a serious possibility or probability that they can participate in investing in the sector. And I remember famously about 2 years ago, I sat with some huge institutions out of the US at a conference that was up in Whistler, and they basically were harping at everyone at the table how we as mining entrepreneurs, whether we be development stage or heading towards production or in production, needed to really start to meet their ESG compliance needs for them to participate and invest. Hey, we love the sector, we can't invest. And we saw that in the energy sector as well. Big US institutions that could no longer invest in US domiciled energy companies. It was just ludicrous, but it's okay to do it offshore. We won't get into the hypocrisy
I get it.
Nonsense.
No, very familiar.
But yeah, so now those guys who are begging for those opportunities, thankfully the pendulum has swung back to more centric where it's reasonable. So the ESG compliance is a little bit more realistic now. And what we did as a company anyway is we just decided to go ahead. We did an independent report on the project through Jamie Strauss's company. They do a whole slew of mining companies where they look at the environmental impact of the project.
Sure.
And you get a grade relative to it. So we participated in that, but we're also participating in getting ourselves towards what's called equator principles, which is more desired by the banks right now, but becoming less and less needed, for financing purposes. But so we've moved our company more and more towards ESG compliance as these institutions and these lenders are actually finally starting to relax a little bit on it. So I guess it's a happy medium.
Become a bit more pragmatic, you could say. Yeah. Okay. Now, when it comes to the company market cap right now, the market's valuation, do you have any thoughts on, what the catalyst might be for a re-rate? And I might suggest it's as simple as market sentiment. You could look at the market today. We're mid to late April right now, and everybody from early stage explorers up to wheat and precious metals are off, 15 to 30%, right? It's impacted everybody. That's the investor's opportunity. I'm honestly not mad about it. Different when you're running a company. I totally get it. But, is that the catalyst that you're looking forward to? Or is it, financing package announcement? Like, what do you think it is or is it just you being on the road telling the story and educating folks about the US gold opportunity?
Well, the financing package will definitely have a re-rate of the company, but that's not it. It is consumption digestion of what we've just come out with over the last 2 weeks.
It's only been 2 weeks.
Correct.
All right.
I feel like there's a very big disparity between our current market valuation and where even in this subdued market environment in the bull market that we're in, but currently slightly subdued market, there's a big gap between that. So yes, it's us being on the road collectively as a company and showing people the metrics and the value that's there. It's a combination of every single point other than us having to basically force feed the market with our
I know you notice it, but do you worry about it? Or are you like, no, it's my job to keep my head down and build value and the market will come to us when it comes to us?
I've become more and more slowly over time relaxed with that perspective.
Okay. Yeah.
Because I do get a lot of outer, parties creating a little bit of stress on a daily basis. Sure. People who have to meet their market. Why are you underperforming? You've come with fundamental news. You've underperformed GDXJ. What's wrong? What do I not know about the company? So everyone always assumes if you're not keeping pace with certain markers that maybe there's some news that they're not aware of. There is no dark storm on our horizon. There is no surprise that we're aware of that no one else is aware of. It is just a complete displacement of just how we're valued right now relative to where I think fair market value would and should be on the company.
Yeah, honestly, I mean, as an outsider looking in, I kind of feel like you hit the nail on the head there with very material news with this feasibility study, probably during the most volatile 2 weeks from a geopolitical standpoint that we've seen in over a decade, right? Mm-hmm. And so that's just a lot for the market to take in all at once. There's a lot of uncertainty right now, just in general, right? And as we just spoke about, even the 800-pound gorillas in the sector, the Wheatons are off 25%-ish over the last few months. We've spent the whole conversation talking about the CK projects, obviously.
Well, just quickly, we could talk to that whole 25% correction.
Let's do it.
And the big, that's the flight to liquidity. And I got into the market in 99, 2000, which was the end of the dot-com bubble. And I started working with Ian Gordon, your father was friends with him over at Canaccord. And we watched these massive market rollovers in gold, brown bottom, gold equities, everything followed and chased these down, and then decoupling and gold equities pulling apart and heading higher. And we watched it again happen in 2000, 2008. We watched it happen through 15, 16, 20. And now here we are with a major global event going on, and there was a flight to liquidity. So the babies get flushed out of the bathwater. People grab them for liquidity. They sell their winners and their losers. They just sell them all.
Yes.
To me, the gold price in this environment right now, unless somebody had a really long lead time of about 18 months forecasting, seeing this coming, that bought gold up to $5,500 in December when it was a darling, I think this is just a hiccup on that pathway. A little bit of flight to liquidity has brought gold and gold equities down with it. I think they're going to launch much, much higher.
And two things I might say about that. The first is that, gold's corrected to $4,500, right?
Yes.
And if I had told anybody 2 years ago, right?
It's correcting on the downside to $4,500.
Exactly. Yeah. Same thing with silver. When silver corrected in February, I actually had some friends of mine who aren't in my industry, but they know where I work, and they read about the silver correction, and they're like, silver crashed, is business okay? And the irony of silver crashing to $80, right? Yeah. Had I told anybody that we'd be $80 silver 6 months ago, they would have rolled their eyes at me. And secondly, you're right. Whenever we see, any event of global instability like we're seeing now, there's always a flight to US dollars. People will sell whatever is not bolted down.
Yep.
Gold equities, doesn't matter, right? That's the case for sure. And what I see is very different today, and I'd love to know your thoughts on this, is that today's gold market is underpinned in a way that maybe 2008, definitely 2016 and 2020 were not. And that is the record central bank buying since 2022. 2023 and 2024, right? Yep. New buyer at the table, which is less, makes me focus on the demand side, more just emblematic of a shifting of the times, right? And how people are thinking about safe haven assets and just maybe the next generation, the next secular market we might be in, which is underpinned by a demand for hard assets across the board and ownership. And that wasn't so present in 2020, right?
No, I mean, look, and I'm more shocked by it. I started to think, I know I'm getting archaic finally, but I really thought the concept of gold was becoming archaic, especially around 2016, 17, 18, 19, when no one, you just couldn't get a phone, incoming or outgoing call in the space. The final nail, the death knell was 72, 73, of course, the final Bretton Woods agreement and the petrodollar. But turns out, history is not that, not just 50 years deep, right. 5,000 years of knowing that gold, ultimately, I mean, it's the best way to avoid all this fiat madness. And I think people are starting to realize it's a great hedge, for a portion of your capital, of your investment, to just have a rider. Yeah,
100%. One of my favorite analysts, Luke Groman, I don't know if you read his work, but, he publishes quite often. I've had him on the show a bunch. And one of his quotes I just loved, when I was maybe about that time, it was 2016, 2017, and I was really questioning the industry I was in, right? Because I got in this business in 2011. And from 2011 to 2017, nobody was arriving, everybody was leaving, right? And I was here trying to rebuild a brand in an industry that was just seeing an exodus of people and capital. 7-8 years into that, you have to question your conviction a little bit. Did I just pick the wrong sector, And a handful of reasons that I stayed in it, some great mentors I was super fortunate to have. But Luke has a great quote, Luke Groman. There's not very many times where you need to own gold, but during those times, it's about the only thing that you want to own, And over the last few years, we've seen a bit of that begin to materialize, I think. So back to US gold, we spent the whole conversation talking about your CK project because that's absolutely the headline and what's driving value today, but it's not the only thing in the company portfolio. Worthwhile spending some time today talking about Keystone?
Oh, absolutely. I mean, it's the monster in the background here. I mean, it is a project that one would just dream of in this current market environment. We've not been able to focus the time and effort on it. So I've spoken to this previously. I don't know when we spoke last, but rather than take this district scale standalone dome sitting, just across the valley from VRIC and Nevada Gold Mines, largest ownership of gold on the planet, which is of course the Cortez complex, I think we would like to probably spin that out, see it as a dividend to our shareholders, a record date whenever we get to a point that we can achieve this, but we're working towards it right now, and let it take on its own dilution, raise capital into Keystone, bring together a real Nevada exploration team, just like previously we did at Gold Standard Ventures. I say we, but my business partner back then, and give it a real day in the sun and a hot gold environment. Like you mentioned earlier, are we in the wrong sector in 2016, 17, 18?
Yes.
Yeah, it would have been, that's when we started US Gold Corp. And that's what we were focused on, was Keystone. And it was just impossible to get anyone's attention to it. But that project could be a complete game changer, company maker, career changer. In one.
Can you walk me through the fact sheet for someone who's never looked at it before?
Certainly. So what we have, again, it sits about 8 to 10 miles away from the Cortez complex, which is owned by VRIC, or Nevada Gold Mines. I think their gold endowment there now is somewhere up in the 70 million ounces of gold range and growing. They just made a report about one of their recent years discoveries called 4 Mile. And I think that added about $30 billion of market capitalization to VRIC. And what it is this intrusive bottom plate lifted dome that gives you very shallow opportunity to access the deep rocks in Nevada that hold the biggest gold deposits potentially on the planet, second only maybe to Witwatersrand. However, I think the Carlin Trend in Nevada has outstripped the Witwatersrand now. Don't hold me to that quote.
Right.
So you get these lower plate rocks that are brought up to surface by these magma bodies and infused with massive amounts of gold. Again, 70 million plus ounces of Cortez. We have the exact same geological backdrop there, the same lower plate rocks, very, very similar aging and intrusives, and a big show in Nevada is arsenic. We have this very big arsenic cap sitting on top of that project, which arsenic and gold are married, joined at the hip, whereas arsenic is the gold. So all the right rocks, the right age group, everything there. And we got 22 square miles of a district that has just never received any real modern day exploration. 6 or 7 scout holes we got to drill in 2017 and 18, I think. The combination of which, but it showed us this wind band package, which is carbonate that's been, heavily affected by these intrusive, groundwater pumped through them for, ultimately you get the right traps and you get very, very big gold deposits. And we've got a hunting ground where there could be 5, 6, 8, 10 of these deposits.
Got it. Okay.
So 22, we want to go find them.
22, yes. 22 square miles. That's the land package.
Yes.
All right.
Yeah.
And it's just been a symptom of timing, effectively.
Correct.
Why you've not,
our previous geologist, he spent a better part of 2 decades consolidating the district. Very, very difficult thing to do in Nevada. Land ownership over 100 plus years, tracking them down, going to the county courthouse, consolidating land. It's something that the juniors can do very well. It's very tough for the majors to do. So we've put together this land package. People go, well, then why don't VRIC want it? Well, why didn't VRIC or Newmont step in and take the gold standard land we had in the previous company? It's just, it doesn't work that way. We'll go in, we're going to do the iterative work now. We're going to prove the viability of it.
Yeah.
And unfortunately, it'll probably dwarf any of the value over at CK or any of the projects I've ever been involved in. I think there's an opportunity there where it could be one of the biggest gold projects in a junior mining company in a very long time.
Okay, well, I understand why you believe it warrants its own company and therefore a spin out. So I have to ask, give any expectation of timing on what that might look like?
Soon.
Okay, all right.
Yeah. Just soon, because we just want to get that. We know there's a lot of undercurrent interest in Keystone right now. And we don't want it to be distracting from all the work and time and effort that's gone through our development team, engineering team.
You don't want investors to have to ask, where's the value coming from? And should I pay attention to this or that?
Correct.
You want to be super clear.
Yeah,
very
get them
binary.
separated. Take the dilution over at the Keystone level, so it doesn't affect anyone at CK, but they're owners by way of the spin out. So I think that's a smart way to do it. It's very soon.
Luke, we covered everything I wanted to talk about. Thank you for coming into the studio today.
Thank you.
Yeah, no, it's an exciting time to be executive chairman of US Gold, and you got a huge year ahead of you. Love to have you back on maybe as we move through the year. So just, I guess my last question for you would be, and this might be a bit speculative, so do what you want with it, but 2027 potential production, is that realistic?
Yes.
That's realistic. Okay.
Yep.
2027.
We think the time frame, are very, very achievable. In fact, we think we can overachieve on them.
Yeah.
We think we can probably be in the realm of project finance within a space of about 3 to 4 months of get-go, which you would think would have started 2 weeks ago, but there's a period where we have to actually speak to the market and speak to our definitive, and then we start engaging independents to help us progress through the project financing.
Put the project financing together.
I would like to think in August we'd have something established for sure.
In August, and then construction second half of 2026 into 2027.
Yeah.
First pour at some point halfway through 2027, thereabouts.
Well, sorry, that'd be end of 27 into early 28. I apologize.
No,
but yeah.
Got it. That makes more sense. This has been great. Thank you for coming in today.
Yeah, thank you.